Hey guys, welcome back to the channel McNallie Money, your home of all things stock, investment, and personal finance related. In today's video, we're pleased to welcome Charles Allen back to the program. He's the CEO of BTCS, and we wanted to get an update on their revised Ethereum strategy and outlook for the remainder of the year. A lot to go through in today's video. Before we get into it, take a second, hit the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you've heard of BTCS before and if you're currently holding shares. And with that being said, let's get into today's video. Okay guys, that's right. Today's video, we've got the chairman and CEO of BTCS, Charles Allen, back on the program. This is an in-demand interview right now. The Ethereum Treasury or Ethereum strategy companies right now, Charles, all the craze in the retail investment community. So very excited to have you on, talk about this Ethereum strategy and the renewed investor attention on BTCS.
Yeah, I'm thrilled to be back. I think last time we connected was in April, so thanks for having me back on.
Yeah, it was good memory, and it seems a world of difference now to then. We were just talking before we turned on the camera here about all of the companies that are getting into this Ethereum Treasury space. A lot of excitement going on in the sector, so I wanted to get right into it. First and foremost, since that last visit in April, you're correct. What have been some of the key developments or pivots, changes at BTCS?
It's been a handful. I mean, one, we've tripled the Ethereum holdings we have from 9,000 to over 30,000. So that's a threefold jump in the amount of crypto we have. So our cash and crypto balance now is just north of 100 million, which is substantial compared to where we were in April. I think we've raised 62 million year to date. I don't know how much of that is after April. I don't really track it that closely as to when those occurred. But I think one of the bigger things is we've kind of reframed the value proposition of the company so it's more understandable to what we're actually doing. I mean, we've been doing the same thing since 2021. Nobody really took notice. And I think perhaps we were too technical in our description. And now we're kind of just boiling down to the basics of why this matters, what we're doing, why it matters so much. And I think that's resonating well, especially with new entrants in the market.
Yeah, it's great to hear. You've been in the space a long time, working with some of the industry leaders here, a lot of firsts in your career. So I wanted to ask what prompted at this point specifically in your career, in the cycle, in Bitcoin and Ethereum adoption, this headfirst move. You mentioned you've tripled the amount of Ethereum on your balance sheet. This is a huge opportunity right now for BTCS. Why is this so important?
Well, I mean, it's a game-changing opportunity. And the funny thing is, we didn't actually pivot. We've been doing this since 2021. It's been the exact same strategy. So finally, what happened is the market awoke to what we were actually doing. We got noticed. And frankly, we were prepared. We were prepared when we got noticed to seize the opportunity to raise capital when the stock went up and do it in a very sophisticated way that we are creating, value for our shareholders. So I think it really wasn't a pivot. And I'm actually thrilled some of these other companies have come to the market and pivoted in because a rising tide rises all ships. And it's really brought institutional interest into what we're doing. Trying to be the only one doing something in the public markets, you're either really smart or everybody looks at you and goes, nah, this guy doesn't know what he's doing. And I think for the better part of 5 years, that was how we were looked at is on the fringe, nobody really understanding. And today, I think what we're doing is getting noticed because it's being done by Joe Lubin, Tom Lee, Bit Digital. So it's getting institutional recognition and retail recognition.
Yeah, that's great. And you just mentioned some of your competitors or peers in the space. So SharpLink Gaming, Bitmine Immersion, Bit Digital, BTCS. You're currently fourth on the list here in terms of Ethereum Treasury on balance sheet for a public company. So can you talk to us about how you position yourself compared to these peers and what specific advantage people have if they invest in BTCS?
Well, I think we're different in that we didn't pivot into this business. And so if you do a pivot where you come in and you basically do a pipe into a existing NASDAQ company and you're shifting your business, you're kind of restricted to just that treasury asset. And you have to continue to run that legacy business for like 6 months to a year, otherwise Nasdaq's going to delist you. Most people wouldn't think of that. So there are some restrictions on the pivots. We don't have that, and I think the biggest differentiator is how we're raising capital and how we're allocating that capital. I mean, that's what investors really care about. How are we going to earn more yield, or i.e. revenue, than our peers? And even though we're like competing with them, I really look at it as more like comparables in terms of value proposition. I hope all of us do really well, and I'm excited to see the likes of Joe Lubin, who created Ethereum, being in this market, driving the narrative. Tom Lee, who's got a connection to Wall Street, really driving that institutional adoption. I'm not getting asked to be on CNBC. I was in the early days when we were the first Bitcoin miner, but having those voices out there telling a unified message about what Ethereum does and its value proposition and how you can access that in a public yield producing vehicle is really exciting.
Yeah, it's a good point you bring up, and you mentioned the adage, rising tide lifts all ships. I think that's very fitting in this type of industry or this phase of the adoption curve. Now, I wanted to talk about this flywheel strategy. You mentioned that one of your points of differentiation is how you raise capital, how you deploy that back into Ethereum and staking operations. So can you talk to us about the flywheel here? We've got the visual up on screen. Why does this set BTCS apart from others?
Well, this is a huge differentiator. So right now we're raising capital in three ways. So we have an at-the-market offering where we can just basically sell shares into the market, and obviously that only really works if your stock is liquid. But it is the lowest cost of capital you can get if you're a public company. It's basically a 3% banking fee, no toxic stuff, no warrants, nothing. It's very clean. Still on the traditional finance side, we did a convertible note deal, and we did that back in, I believe, early May, and when the stock was $2, and we did the warrants that came with that deal struck at 275, and the converts at 585. So we did a 200% premium on the convert and a 40% premium on the warrants, which is a huge above market deal. So that really showed the value of the company, and it allowed us to deploy that capital and minimize dilution. Then when we move outside of the traditional financing structures, and this is what really excites me, is marrying traditional finance and decentralized finance. So we're able to take the funds we raise and lever them up. So if we just kind of think about how this works, if we raised $10 million one day, and it's happened, all of a sudden we could take that, we'll buy Ethereum with it. We'll take the Ethereum, we'll deposit it in Aave as collateral, which is it's a decentralized lending and borrowing platform. Borrow against it up to 40% in USDT, so it's a stable coin, and then we'll take that stable coin USDT and buy Ethereum. And the Ethereum we buy with the proceeds from Aave, we are staking. And so that kind of goes to our blockchain infrastructure operations, and even what we deposit as collateral earns interest. So if we're earning just ballpark 2% on our deposited funds and 3%, and we're paying 5%, it means our net cost of capital on an annual basis is 3%. Obviously that's a floating rate, so it could change, but 3% cost of capital is like near nothing to be able to lever up in literally under 5 minutes and deploy that capital. So we are able to like rapidly deploy capital to earn yield and drive revenue. And I think that's something that none of the, at least not yet, none of the other public companies are doing that. And I think we've borrowed about over 15 million on Aave. And so we're taking those funds and deploying them. And that's where it gets into like the, complex side of like, what do we do? So we run the block builder and we run validator nodes. So we're kind of vertically integrating those. And that's a key component of that flywheel. That's driving the revenue. And I think when you take the DeFi aspect that we're doing on the capital raising with the low cost of capital ATM for our funding structure and deploy that into operations, kind of like a Bitcoin miner, where we are staking and block building, we have something that's, vastly different and unique than any other public company in the market today.
Yeah, I like what you said there. The underlying business is fundamentally aligned with exactly what you're trying to do here on the Ethereum strategy front. So that is a unique advantage, I would agree. And one of the key benefits of that on the Bitcoin side or Ethereum side is we're seeing some of these treasury companies now actually given a premium by the market, known as an MNAV or multiple on net asset value of your Bitcoin or Ethereum. And it's exactly what you just said there, Charles. People don't understand the complexity. There's a lot of back end opportunity. There's efficiencies of scale, things that corporations maybe can do that individuals can't. So there's now this premium or MNAV built into some of these companies. Can you talk a little bit about what that is in the sense of BTCS and where you think that will eventually level out for some of these treasury companies?
So right now we are the lowest MNAV of any public Ethereum company. I mean, it's ridiculous. If you look at the others, they're in the 3, 4 range, and we're substantially less. So in that sense, I think we're about one based on our market cap, and if you include our preferred, which is not even convertible yet, it could be in the future. We're around two, and so we're a huge value play, albeit smaller, but we also have a very unique value prop, as I talked about, in terms of you're getting leveraged exposure, and that leverage comes in two fronts. One is the leverage we're taking by using Aave, so we're less dilution by levering up and buying ETH at a low cost of capital. And then two, the leverage we get from an operating business that we've been doing for 5 years, running Ethereum validator nodes and getting really smart there. And we spend a lot of time on our past interviews, and I would really focus on, here are the core operations and here what we do, here's what we do, and try to explain it. And frankly, I'm not going to spend as much time doing that. Our operations are integral to our treasury strategy, and they drive, substantial revenue beyond what others are doing and the potential for higher yield. So you have a highest yielding company with the lowest valuation is kind of the way I look at it in terms of we'll have the highest revenue per market cap or per ETH of any of the other peers, at least in the short run, and we'll see what they do, and the lowest valuation, relative valuation.
Yeah, really interesting how we see those valuations change relative to one another, even in the same space. We're noticing that on the Bitcoin side as well. So the next question I had for you, talking about that Ethereum acquisition strategy, obviously you have the block building, you have those integral parts of the organization that generate revenue, but in terms of more traditional finance or raising funds, we've seen some of the leaders in the space, so think Sailor or Strategy, come out with a weekly cadence or purchase of Bitcoin. Do you have any plans of something similar on the Ethereum side, using funds that are raised, maybe not from internal business operations?
We've been debating doing that internally. I know the Bitcoin miners got in that habit of doing, monthly Bitcoin production reports. That was more from the mining activities. I think for us right now, we're actually hitting materiality thresholds where we have to disclose because we're growing so fast. And we put out an 8K this morning that we had, purchased 8.2 million of Ethereum. And so for us, it's like, we just put out a release the day before. We're not putting out another release. We're just throw it in 8K and put it on social media because we're not going to be doing daily press releases as we chip away. I've seen SBET do or SharpLink. They've put out. I think they put out a release yesterday or today that it was another 400 plus million, and it was within a 4 day span. So you run into this issue of monthly's great, but if it hits materiality, you're doing it more frequently. I don't know what we'll do for a normal cadence. I mean, the normal cadence for public companies is, quarterly reports. I think we'd like to be a little bit more transparent with that, but it's also, doing daily. We're not doing daily reports, unless we have to. It's too much work. Like all I'll do is, give daily updates. So, long way of saying we're looking at that cadence of what the best way to do it is.
In evaluation. Yeah, it's an interesting component of this sector, very transparent compared to a lot of the other sectors we cover on the channel, specifically in light of the blockchain, I guess, mantra where you can see everything full transparency. So interesting to see how that progresses, and we'll continue to stay tuned for those updates. Now, I wanted to specifically talk a little bit about the staking. Now, this is another big aspect of these treasury companies as opposed to the ETF, you guys are actively staking this Ethereum. So can you give us a little bit of detail? I'm very uneducated on the Ethereum staking side of things, Charles. So how does it work? What's the average percentage return? How often is that paid out? Is that through the same custodian you mentioned for some of the lending products? And how does that all work?
It really depends. And I think this kind of goes to one of the differentiating features with BTCS. I think all of the other peers use a third party to stake. So they have a qualified custodian, they stake to a third party, and they're paying that third party custodian a fee. I think I mean, I don't know what everybody's deal is. If you're large, maybe you're getting a better deal. But I've seen anywhere from, I think they average around like 7 to 8.5% is what they charge of your staking rewards to do that for you. I don't know on the qualified custodian side. What we do is we actually run those validator nodes ourselves because we've been doing this since 2021. This is not a new business for us. So we run validator nodes for solo nodes, which means we're just running them kind of on the network as is. And then we also run validator nodes for Rocket Pool, which is a liquid staking token, which means we don't have to put up all the capital. So if we want to run a node, and I know it's changed. It used to be 32 ETH per node. Now it's expanded. But generally speaking, you would put up, if you put up 8 ETH, they would put up the other 24 ETH to get to 32, and you're going to get a piece of the liquid staker is going to pay a fee, just like someone that's staking to a third party staker. They're going to pay a fee for that liquid staking token, and we would share in that fee with Rocket Pool because we're providing the blockchain infrastructure and running the nodes behind that. And so I think that's where we're a bit differentiated in that we should have a higher staking yield than others because we are not outsourcing it. We're doing it ourselves.
That's great. And is that paid monthly? And what kind of percentage returns
Daily.
daily?
So you earn daily, and it could be multiple. I mean, just it streams in every time. There are two types of rewards. There's consensus rewards and execution rewards, and those add up. And I don't know the exact percentage right now. It's paid in ETH, and it depends. It's in the ballpark, just under 4%.
Yeah, that's great. I've heard in the 3.5% range. So I appreciate the detail there. And again, a unique aspect of these treasury companies that you can't really get on the Bitcoin side or on the Ethereum ETF side of things. So another unique aspect here. Now, I know you don't want to go into detail of some of the technical or core operations here, but are there any updates on the block builder side of things or Builder Plus operations that you would like to share?
And we have disclosed that we anticipate record revenue for Q2. Obviously, we had not scaled up as much as we had in the last couple weeks, so I think that's a positive. In Q1, Builder Plus accounted for 80% of our revenue. It's obviously much, it's low margin, but overall, on the Builder Plus side, we're I think just shy of 3% of all transactions processed on Ethereum. So that's a pretty big number. If we can become a leading builder, the margins start to get, good. And it's another way for us to earn ETH that other digital asset treasury plays are not going to have. So that really comes with scale. The block builder right now is losing money compared to the staking aspect. Combined together, they're okay. But I think if we get those things to scale, that's where we can really shine. And that's what we kind of tried to articulate in the revised flywheel and messaging of, hey, we're not this really complex company that you need to understand. We are leveraged exposure to Ethereum in the public markets, and we should trade at a premium to Ethereum because your ETH per share goes up because we're able to access the capital markets, and we're doing it in a very sophisticated way. And that's basically what MicroStrategy did, right? Except, I mean, imagine if a strategy software business actually helped drive and grow their Bitcoin holdings on top of them going out in the market and purchase it, right? I mean, that's basically what we have. We have a strategy like business where we're acquiring through sophisticated financing structures, Ethereum, and then we're growing that through staking and integrated operations. And that's, again, as I said before, that's a differentiating feature for BTCS.
Yeah, really complimentary and totally agree there. So in closing here today, again, I feel like so much has transpired just since April. What should we be watching for next from the team at BTCS?
Well, it's really exciting time. I mean, I couldn't be happier, especially with the potential stablecoin legislation coming through shortly. I think more frequent updates. We've obviously with the new administration, we're more active on social, so you can get updates on X. So I encourage you to follow myself and BTCS. But I would expect, and I don't want to give out forward-looking information, that at the rate things are going, we are looking to continue to grow our Ethereum holdings and drive revenue and earn more yield. I know that's very vague, but I don't want to give forward-looking statements. But it should be we're looking like it's going to be a pretty good year.
Fair enough. No, we appreciate the transparency, sharing what you can. It seems like it's a tight race and everybody's shooting for that next level in terms of the Ethereum acquisition. So thank you so much for the time today. Charles, we look forward to having you back here. Congratulations on all the success and attention your company is receiving, and we'll talk to you soon.